so looking to the next level, all the different other types of IRA accounts or retirement investment accounts that are out there, the 401k arena. Can you start to just maybe give us some clarity on what options are out there and how docs could start to sort this out?
Absolutely. And as I mentioned in previous podcasts, the rules of the game when you're an employee working for a dental practice
Mm-hmm.
or working for DSO are very different than when you own your own practice.
Yep.
So as I mentioned, with an IRA account, if you even qualify for it, the limit if you're under the age of 50 is only 6,500.
Mm-hmm.
If you own your own practice, there's a series of very, very tax efficient approaches you can take.
Okay.
So one is called the SEP IRA. One's a 401k with profit sharing or without, simple IRA, 401k with safe harbor, profit sharing. Those are all called defined contribution plans. And then my favorite for older individuals, older dentists, is a defined benefit plan. We typically recommend a cash balance plan in that case.
Mm-hmm.
So I'm going to do some comparisons of these
That'd
now, because now those words that probably don't mean much to listeners.
Right. Yep.
So let's do some comparisons here. So with a traditional IRA or Roth as an individual, the most you can put away is $6,500.
And John, if I could start to interrupt you real quick, can you get me a slide that I could put up while you're talking about this to show some of these examples while you're giving the numbers, and I can put it in afterwards?
Yes, absolutely.
Okay.
Yep.
Right. Perfect.
Okay, so first retirement account I want to talk about is an individual IRA, which is a traditional or a Roth. As an individual, the maximum you could put in is 6,500.
Mm-hmm.
If you're 50 or older, there's a catch-up provision, so that gets bumped up to 7,500, $1,000 catch-up.
Okay.
If you set up a SEP IRA, and that you can only do if you own your own business,
mm-hmm.
you're able to contribute up to 25% of your income, maximum 66,000.
Wow.
That's a terrific example of a comparison. The benefit of being self-employed puts you in a position where you can put away 10 times more towards your retirement.
Yep.
So you don't have to be a rocket scientist to realize by being self-employed in this capacity, you'll have an opportunity to contribute 10 times more. And that probably means you're going to get to point X 10 times quicker as well.
Mm-hmm. I think that's such an important point for people to understand, because we talked about last time the challenges of practice ownership and that it's not for everybody. And that's not what we're saying, that everybody should or has to run or own their own practice. But when you're making these decisions to work for a DSO or to work for another doctor, you are giving up some things as well when it comes to autonomy and your ability to be super aggressive from a tax standpoint and a retirement tax standpoint. And I think it's so important that doctors understand that what they choose to do, obviously, up to them, and everyone's going to do something different based on their specific situation. But it's so important, I think, for people to understand that being an independent practitioner, owning your own practice, still does have a lot of advantages.
Absolutely. And we talked about that last podcast where we said the difference between working private practice or DSO, working for yourself. Clearly, the ability to maximize the amount of money you could earn year over year and throughout your lifetime. Private practice, there's nothing like it. That's going to be the better choice. And then in terms of almost all, I'm not saying all, but almost all of these tremendous tax savings I've been talking about here throughout all the podcasts, most of these are available to practice owners, not to individuals. So it really is a whole set of rules for businesses versus individuals.
Yep.
So I couldn't agree with you more.
Right.
So we do have 401k plans.
The
maximum there you can defer is $22,500 plus $7,500 if you're 50 or older. They're simple plans, $15,500. If you're over 50, there's an additional $3,500. So there's so many different choices there. And the question I often get is, well, which one is best for my practice?
Right.
Well, that depends on the facts and circumstances. So depending on what stage of practice you're in, we're going to analyze it. We're going to ask you a number of questions. We're going to look at your profitability, and then we'll put you into a plan that's most suitable to meet your needs. If there was one great plan out there and that was the answer for everybody, guess what? all the other plans wouldn't exist. There'd be no reason to look.
Right.
So you got to just be open-minded and understand that it's not as straightforward as you would think.